What's up, everyone? It's Eric from Option Edge, and today we're looking at the S&P 500 and its seasonality pattern. Okay, so there's been a lot of talk online on FinTwit and all that about how September year over year tends to have far lesser returns historically versus other months. Okay, and you can see here that we're looking at if you look at the black line here, the bluish black line, that around summertime to late summer, August, September, early fall, we see some of the worst returns historically. Okay, so that's just something I've seen. And if we take a look at the current S&P 500, the SPY ETF Spider, you can see that we've been on a absolute massive run since, let's see, the big downturn. This was coronavirus hit. After the month after coronavirus hit, the Fed stimulated the economy, stimulated by with quantitative easing and asset purchasing, and you can see that we've had nothing but straight up. But you can see actually, so last September we had a pretty big gap down. Okay, so this is the monthly view here, and you can see big red volume, selling volume. So let's go to 2019. So 2019 was slightly up after a lower August. Okay, so that late slump, late summer slump sort of hit in 19. Let's go back to, if we go back to September 18, not much of growth. Then October saw a big dump there. We'll go back. Let's go back down to a couple more. And we're at, okay, so you see in 17, we saw some positive growth there, but not much in September. We'll go back one more. September 16, you can also see a pretty big slump. So it seems like September and October have, as of late, have had some of the worst returns. Okay, here's another September 14 slump. Let's look at last one. Another slump September 15th. Okay, then but a bigger, much bigger October. So if we look at the year to date, the S&P 500 has made a 33%, almost 34% run to the upside. I think we're at a 20% run year to date, going back to January 1st, comparing to where we're at now. So on top of that, we've also seen some. I've seen some guys, some hedge fund managers come out and say how here it's saying that maybe it's not September that's going to see the correction, but maybe October. And this is Tom Lee, who runs at one point ran a pretty substantial hedge fund, and co-founder. He's co-founder of the head research at CNBC, Trading the Nation. So he was saying that we don't think that there's a correction coming for September, but maybe a 10% correction coming in October. Okay, and let me hop over to here. I'm looking at some interesting things on Barron's. So here, this is talking about how Goldman Sachs is expecting a far lesser GDP growth than initially anticipated, and they think that it's sort of due to the Delta variant, mostly due to the Delta variant. At this time, we thought we would be well out of the coronavirus. We'd be living life normally by this time. So the fact that we are still having issues with cases is alarming. And this article also talks about how consumer spending is most likely going to decrease, and that 2/3 of the economy is driven by consumer spending. So that says that, right? Consumer spending makes up more than 2/3 of the U.S. gross domestic product. So these are all signs that maybe in the next month or two, we could be heading for some bad market weather, so to speak. And here's another reason why this fall the market might struggle. Just talking about how we've had some massive Federal Reserve spending, and that we're due for some tapering. And in other words, brace for a volatile fall. So what am I doing? What am I doing to combat this? Okay, so and I've talked about this a little bit, but my biggest strategy for for combating a downturn in the market is I like to hedge with calendar spreads, and I usually like to do that. I like to get my largest hedges when we start to hit that upper Bollinger Band, the regular standard standard deviation Bollinger Band, not to be confused with the one that I talked about in my other video. But yeah, once we start hitting the upper Bollinger Band, like boom here, I like to sell, or excuse me, I like to buy calendar spreads, calendar put spreads, and get, sometimes I'll get 5 to 10% returns on those, and it actually works pretty profitably, or pretty consistently. I've been able to profit from those calendar spreads. So if you want to look at how I hedge with calendar spreads, I made a video. I'll link to it up top here. But yeah, those are my thoughts for the S&P 500. So yep, that's it. If you like this video, please like and subscribe. And as always, this is not financial advice. Alrighty, peace out. Have a good night.